Hey folks, Dan Frio here, the rate update. Today is November 5th, 2021. What do rates do? Don't go away, that's what we're going to talk about next. Big week this week, guys. The Federal Reserve came out and said they're going to taper. So everybody thought that mortgage rates were going to spike. I didn't. The next thing is the employment numbers came out today, and we had a lot of analysts yesterday say, lock in your rates, lock them in yesterday morning. I didn't. Who won that bet? I did. So the first thing is, let's look at what's happening with the employment numbers, and then I'm going to really dig in behind the scenes to see how that's all affecting the Fed's rate decisions and what's happening with mortgage rates. So take it away, Rick Santelli.
And then the real number?
490. 490, 4.5% unemployment would be my number.
All right, and what is the
And
number?
the numbers are going to be coming out here momentarily. I see the unemployment rate stuck, I'm seeing it come out in different pieces. 531,000. There we go. 531,000 on non-farm payrolls. Private payrolls, 604,000. Wow, that's a biggie. Change in manufacturing, double expectations, up 60,000. And if we look at the unemployment rate, I still don't see it showing up, but I see average hourly earnings month over month up 0.4%. As expected, lower than 0.6 in the rearview mirror. If we look at average hourly earnings year over year, okay, 4.6 on the unemployment rate. I see 4.9 year over year average hourly earnings. Put an asterisk there. That's one of the biggies. If we look at average hours worked, 34.7. That's actually a 10th light. And finally, the most important number, in my opinion, 61.6 on labor force participation. I'm sure everybody at the desk remembers it was 62.6 pre-COVID. You have to go back almost 50 years to find the 61.6 in the mid-70s, and that translates into about 4 million workers missing. I'm not sure exactly where they are. And the underemployment rate, 8.3%. That drops 0.2 versus the rearview mirror, 8.5%. And as we look at the markets, we see that the pre-opening equities seem to have liked this number as the Dow starts to gain some points. Well, let's throw it back to you, Joe, and the panel.
The jobs report roaring back. Okay, well, it's helping the stock market and it's helping the mortgage-backed securities market because rates are dropping. Wanted to note that a lot of economists and a lot of forecasters yesterday morning said lock in your rates before the Fed and all this other stuff really starts coming into play. Well, if you did that and you didn't listen to me, you actually could get a better rate today. Okay, on my team, we didn't lock anybody in. Unless you're closing like tomorrow or the next few days, we're not locking you in. Let me explain what's going on behind the scenes. All right, so we go into this section here. Job creation's roaring back in October as payroll rises 513,000. Well, if you follow my channel and you really pay attention to this stuff, I do it on your behalf. About 4 or 5 months ago, the Fed said, we don't care about inflation. We're more concerned about the jobs market. And until jobs come roaring back in the tune of not 500,000, in the tune of more like 750,000 to 1 million a month for probably 3 or 4 consecutive months, we're not going to raise rates. Well, the Fed didn't raise rates the other day. They said they're going to taper. So basically what they're going to do is start pulling out and not buying as much treasuries and mortgage-backed securities, and that would reduce demand and increase prices and lower prices and increase yields and all this other stuff. But the caveat here is, and if you paid attention, the Fed came out and said, we're going to do it for 2 months, and then we're going to reevaluate. It was genius because why? They appeased everybody. They appeased the stock market because they're like, okay, well, if the jobs don't come roaring back, the Fed might ease again. They love that because the markets love free money going into the system or easy money going into the system. So they love that verbiage. Mortgage-backed securities liked it because they're like, okay, we got the uncertainty kind of out of the way a little bit. But if things kind of stay the way they are and maybe get a little bit worse, the Fed's going to jump in and do something. So the Fed is still there backstopping everything. You can tell by the Dow's up today. Mortgage-backed securities, I'm going to go over that in a second. They come roaring back today and yesterday. So let's get on to it. What's going on in the broader markets? Well, you can see job creations roars back to 531,000. Okay, awesome. Then I dug through what the Federal Reserve said in their. This is basically a transcript of what they said and they did. And again, this is where I'm finding all these little pieces of the puzzle, saying they're only going to do it for 2 months. And a lot of people miss that. You probably won't hear that on mainstream media. They're just saying, hey, the Fed's going to taper. Okay, so that's why you need to watch me, not mainstream media. So where are rates right now, posted this morning? Well, right here, they're going to get better. Okay, why? Is because the MBS market's rallying. But for now, let's go over where rates stand right now. And again, we're not locking you in. We are floating you to pick up better rates. So the 30-year conforming rate right now is 312. Yesterday it was 317, so it's down 5 basis points. So that's what 0.05 means. We call it basis points, okay? So these are not my rates, guys. These are the national averages, okay, throughout the whole country. 15-year, 252. FHA, 275. Jumbo, 31. And 5-year ARM, 3. And this gives you the changes over here. All right, so this doesn't account for this yet. All right, so this is what's going on in the market. MBSs are up 33. What do we know about the MBS market? Is the price goes up, what happens to the mortgage rates? They go down. There's an inverse relationship. Yesterday, we were up 27 points. So we're up 60 points in the last 48 hours, say. Okay, that's a huge move. And I'm going to show you that in the charts right now. So this is where the charts are right now. I already have a bunch of things checked. So since the inflation numbers really hit mainstream media, mortgage rates skyrocketed. And remember, down on this is the price. It means up in rate. All right. Other factors we see here are these lines right here. These are what we call Fibonacci levels. These should be basically, this should create a ceiling up through here and a floor down through here. Well, it's not holding very well because we blew through it here on the downside, we blew through it here, and we're not even hitting the cap. And the last time we hit the cap was in September. So the next thing I start monitoring is other criterias in here, which are moving averages. 100-day moving average, 50-day and 25-day moving averages. And those are right in this range here. You can see that. The 25-day, 50-day, and 100-day moving averages. We're approaching those, but those have been also irrelevant since back in September. So I'm really not looking at a lot of this stuff. I'm just looking at the trend. And until this trend makes a reversal, I'm not locking in anybody's rate. Okay. The economic news for today, as we know, the unemployment rate is 4.6, down from 4.7 or 4.8. The expectations was 4.7. I disagree with this number. I think the number is more of a 8.5 to 8.6. And I'll explain that next week in another video. I don't want to bore you to death today. So that's what's going on there. What's the intraday look like? This is awesome. It's nothing but green and going. I told you guys we were oversold or overbought right here. Oversold, I mean. People are starting to buy back into the market. Okay? It was oversold. Things always overreact. Need you guys to start listening to me. Go back to my old videos. It validates all the information. When I'm wrong, guys, I tell you, I come right out and say I'm wrong. Okay, so how do you find out more about me and my team? One of the biggest things is I want to emphasize is if you're in the process of a mortgage right now, we have a new system. I'll review your loan estimate for you for free. I want to be your mortgage consultant, guys, to let you know the quote you got, is it the best out there? If it's not, I'm going to help you find the best rate in the market, as well as the best fees. Okay, so if you're looking to buy, refinance, cash out, do home improvements, consolidations, put an addition on, whatever you need, get out of forbearance, do a streamlined finance, anything you need, please reach out to us. But if you're in the process right now and you locked your rate or you didn't lock your rate, your lender has to send you within 3 days upon your credit a loan estimate. That loan estimate's going to break down everything, your cost, your rate, your fees. They're going to slide in things they probably didn't tell you about. I'm going to analyze that for you guys and get back with you within an hour if it's during office hours, I promise you. And we're going to let you know what we can do or we can find you. Okay, so how do you do that? How do you find out more about me and my team? Well, go to therateupdate.com. It's going to be right here. All right. What I need you to do is, if you want to upload your loan estimate, click resources, upload loan estimate. It's going to take you to a secured site right there. You're going to click it. You're going to log in, create an account. In this message, please tell me just a little bit about what you're looking to do. And I need your credit score. What credit score did your lender pull when they pulled your credit? I need to know what that is, because that's a huge part of your rate. So just fill in this information, drag and drop your loan estimate in there. It'll automatically alert me that it's in a secured site. I'll jump in, get that information, and figure out, what rate are you at? What program are you in? Make sure all that is accurate. If it's not, I'm going to let you know, and then you decide. It's not a hard pressure sale. I'm just going to say, here's what I would do. Here's what I would suggest. You do what you want. So that's how you find out more about me and my team. I hope you do. I hope you check us out. Please don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. God bless, guys. That's it for this week. I will see you back here on Monday. Bye-bye.